Bookkeeping can make you rich. Yes, it really can. I know it's a boring topic, but it could bring you in some dough. Hey there, my name is Kenner French with VastAssetDefense.com and also with VastSolutionsGroup.com. I've been asked to put this together really to help real estate types to make some dough. How? Bookkeeping. I know it's crazy, but basically what I'm saying is if you have clean books, you're organized, your enterprise value, your company value could be worth more. And I know you like that, right? Plus, by the way, how do you know if you're profitable unless you have clean books? Well, let's get to it. We're going to have the top 5 tax tips for real estate types. Now, when I say real estate types, I mean, investors, I mean, real estate agents, kind of the whole gamut as far as real estate. That's who we work with at VastSolutionsGroup.com and also at VastAssetDefense.com. So again, top 5 bookkeeping tips for real estate types. We're going to go in and out. We're going to be in and out of here in maybe 15-ish minutes. This is going to add some value to you. Here's an introduction, bookkeeping basics. Obviously, you need to understand the importance of accurate bookkeeping. Without accurate bookkeeping, you don't know if your rate of return is good in a specific division or in a specific company or a specific endeavor. So that's why I would say have good books. And by books, I mean really know what your income is, what your expenses are, what your balance sheet is. The cleaner those are, the better off you'll be. And we'll talk about that at the very end. Client financial tracking, you want to track your financials on an ongoing basis. There's ways to automate this. Yes, there are ways to automate this. A lot of people don't know that, but there are ways to automate, especially right now. By the way, we've been doing VastSolutionsGroup.com. We've been doing artificial intelligence for years. We started in 2018 with our own model. We even started doing the research, et cetera, in 2010. We call our model called Einstein, which is specifically put together to help business owners really to mainly lower tax liability, also help with their enterprise value, the books, et cetera, et cetera. And it's added value for a number of business owners, real estate types all over the country. We have offices all over the country. Tax prep, also it helps with tax preparation, and more importantly with tax projections. That's something you want to do because you want to know what your tax liability is down the road so you can lower your tax liability. One way of doing that is by having clean books, clean financials. Expense management, going back to the point about, bookkeeping, if you know what your expenses are, if you know how to potentially lower your expenses, you'll be much better off as it relates to your company. And then financial reporting on an ongoing basis, you can see what your finances are and how they're acting and how the rates of return are for a specific investment. So here's tip 1, separate your business and personal finances. A lot of people come to us. Actually, we had a client, or I should say, then a prospect come to us. They had all their assets jumbled. They were worth about $40 million, $38 million to be exact. And they had their separate business. They didn't have any separate businesses. So everything was all combined. All his entities were, no, he didn't even have any entities. All his assets were under his own social security number. By the way, there's asset protection issues there. And then his personal finances all jumbled on. And at the end of the day, he was even doing his own taxes to a certain extent. So he didn't know what his $38 million asset net worth was doing. Right? Because it was all jumbled. I know it sounds crazy that someone with $38 million would be that unorganized, but he frankly just didn't know. He had some crypto and some real estate. That made it even more confusing. But what I would say is if the assets are all combined, sure, you're open for lawsuits, but also it's hard to do your taxes, do your tax planning, do your know where specific accounts are, et cetera, et cetera. So what I would say is maintain separate accounts for each endeavor and really for each, let's say LLC. If you have one LLC here, one LLC here, one LLC here, one LLC, you're not supposed to make purchases and transactions in one LLC where it was intended for another LLC, as an example. By the way, if you don't know what I'm talking about with respect to LLCs, limited liability companies, really what you should be doing is talking to your advisor and understand how to use LLCs to lower your tax liability, number one, and also really to help your asset protection, have a moat around your assets, and then also that'll help with your personal finances. Now, what I would also say is, go to your advisor. If they don't understand some of these concepts as far as bookkeeping, 1, run, but 2, you can reach out to us. Remember, my name is Kenner French, VastAssetDefense.com, also VastSolutionsGroup.com. We've been around at VastSolutionsGroup.com since 1969. We're here to help really entrepreneurs all over the country organize their finances, with a bookkeeping team, again, tax team utilizing artificial intelligence to help organize, lower tax liability, et cetera, mainly for real estate agents and investors. Also, going back to using separate credit cards. Again, let's say you have one endeavor. That one endeavor, even if it's in an LLC or not, you should be using one credit card or one account for that specific endeavor. So you know, well, what your rate of return is in that specific endeavor versus another endeavor. It's really hard when the water's muddied to know what your rate of return is. And we as investors, as real estate agents, as real estate investors, we really should know where our investment returns are coming from. It's coming from here, an entity here, piece of real estate here. We need to know how things are going so we can better judge what to do as far as strategies going forward with that endeavor. Anyway, that's tip 1, separate your business and personal finances. 2, track expenses diligently. Now here we say record your expenses promptly versus waiting 3 months to track your expenses, right? No, you should do it on an ongoing basis. I would say, really, if you really think about it, the thing that makes the most sense is, let's say you have a credit card here, it's in an LLC, really have your transactions in that specific LLC on an ongoing basis in that LLC. So if you're out to dinner, let's say as a real estate agent, you're out to dinner talking about marketing for your, let's say for your LLC, for your marketing, etc. What you should do is just have a credit card for that specific endeavor. What does that mean? It's going to be easier to track as a result. So if you do a credit card transaction, you can record that expense on an ongoing basis, much easier than if the water's muddied by putting a transaction here when it was intended here and then supposedly to switch it over to that LLC as an example. That doesn't work. I get it. Believe me, you're never going to remember to do that. Plus, you're supposed to keep the assets completely separate, the transactions completely separate from one LLC or one endeavor to the other. Categorize your expenses. Everyone doesn't do this correctly. It's sad. You need to categorize your expenses because at the end of the day, it'll be easier if you're doing it correctly to know, again, what your rate of return is. I would say get it as specific as possible, your categories, because then you know if one action led to a rate of return that's profitable or not. And then review and reconcile. I know it sounds crazy. Spend let's say a couple hours a month analyzing your expenses, analyzing your revenue to make sure things are tracking the way you want. That's tip 2. Now, tip 3. Utilize accounting software. What we would suggest is, sure, have someone else do it, offshore it, we're going to get to that, or utilize a true life accounting software. It can be accounting software, bookkeeping software, etc. There's tons out there nowadays. Here we, outline QuickBooks, Xero, FreshBooks, whatever the case is. You can automate that. Now, I get it. There's 2 ways of looking at it. You can just put your head in the sand and not deal with any of this stuff, or you can, bring your head out of the sand. You can do some of these transactions we're talking about, or you can have someone else do it. I don't care which it is. Don't put your head in the sand, because at the end of the day, you're just an entrepreneur. As a real estate agent, as a real estate investor, you're an entrepreneur. And you might, if you're a real estate agent, you might be dealing with a specific niche, that being real estate sales, but you're still just an entrepreneur. How do you know if your rate of return is good unless you track it? One way of tracking it is accounting software. Let's go back to tip 4 now. Maintain organized records. Utilize a good filing system. I don't care, again, if it's Xero, FreshBooks, whatever the case is, utilize a good filing system. Label and categorize. The better you're categorizing and labeling a specific transaction, the better off you'll be, the happier you'll be down the road. Store digitally. If you're doing stuff based on paper, and believe it or not, we do have some people who are doing paper receipts, you got to do away with that. You got to organize yourself. Now I'm going to take a quick moment to tell you a story. Another story. We had another guy bring in his receipts truly in a shoebox. Then what we did was we organized them, and it took forever. And then what we ended up doing was coming to him with a specific report as to what his assets were invested in, et cetera, et cetera. And man, he was blown away because he was putting all his energy towards a company that he thought was making a lot of money, and it wasn't. We put it online. What ended up happening is he ended up figuring out what his rate of return was in a specific endeavor, that being a better one. And then he moved his assets towards that one. This just actually happened not too long ago. So anyway, what I'm saying is, by the way, he ended up, he's in the process of selling that entity, the one that wasn't making any money that he thought was making so much money. On an ongoing basis, I mentioned once a month or whatever the case is, review. And if things aren't going right, you got to purge, get rid of it, right? And then you got to back up and protect. Safety is important. You're supposed to keep, theoretically, you're supposed to keep your assets and books, et cetera, for into infinitum, but what I would say is backup protect, usually online, as I mentioned here, stored digitally. All right. Yes, what I mentioned before, yeah, I'm preaching to the choir here, potentially hire a professional bookkeeper. Why? Because you'll have improved compliance. Sure, that's coming from me. What I would say is because we have a bookkeeping group here at vastsolutionsgroup.com, also at Vast Asset Defense. What I would say is, I get it. You're thinking while they're marketing themselves. I don't care if you do hire a professional bookkeeper. Most of our clients are well-heeled. They have usually millions, right? Our average new client our active new client has asset net worth of 19 million. But what I would say is a lot of people don't want to have a professional bookkeeper. I get it. If so, then you have to dive deep into your business, having the books in order on an ongoing basis. I think sometimes it makes sense for someone not to hire a professional bookkeeper. But if so, that's great. Just do diligent, do a number of these tips, and you'll be okay. What you also get with a professional bookkeeper, even if they're worth just half their salt, if that makes sense, accurate financial reporting. Again, so everything's laid out on, let's say, a monthly basis. They could walk through the process with you on an ongoing basis and make you that much happier because they're kind of a neutral viewpoint on what's going on with your business. Time savings, hire someone else to do it, then you don't have to do it. You could be investing in real estate or marketing more real estate, et cetera, as an agent. Finally, insightful analysis. I basically touched base on this before where I said, well, you have a neutral analysis of what's going on. What also you have is someone who's been working with a number of different businesses. If they're like us, they have hundreds of clients and they know, our bookkeepers know exactly what's going on with various different businesses, and they can provide some consultation as a matter of fact. Yeah, there's a cost to it. There's no doubt there's a cost to it. If there's no value being given, don't worry about having a professional bookkeeper or look for another professional bookkeeper. I should also mention what we have is we have a second service, a second set of eyes that we can help work with sometimes professional bookkeepers or sometimes clients to help act as a second set of eyes and a consultant for a business. Or here we have, the benefits of organized bookkeeping, as I mentioned, kind of a summary, improved financial decision-making, efficient tax preparation, which we haven't really gone over, but I'm going to go over it. I should go over it here. It's so much easier if you have clean books, organized financials, organized transactions. It's easier to lower taxes or do tax projections as a result. So your tax prep becomes more efficient, by the way, costing less because everything is all organized because your books are in order. Now, think about that. Do you want to spend a bunch of money having an administrative person, let's say a professional bookkeeper, running around checking out receipts, or do you want them organized in such a fashion that it can be more creative in helping to lower tax liability? Because at the end of the day, I really believe that bookkeeping is really a component of tax mitigation. The better your books, the better you can mitigate and prognosticate what your tax liability will be, and hopefully in an effort for, who knows, finding some strategies that are out there that can lower your tax liability. Who knows, maybe if you have an organized bookkeeping system, potentially you could lower your tax liability, let's say by $200,000, whatever the number is. It's worth that cost, let's say, to have a professional bookkeeper potentially. Enhanced business management, I throw that in there. You would potentially be able to have enhanced business management because you know what your overall business is doing. Conclusion, you're happy, organized, and potentially rich. Let's say we were just doing a project actually about 6 months ago where the client was selling his business. His books were not in order whatsoever. Great guy, by the way. And what ended up happening is a marketing guy, big time, young marketing guy, just blowing it up. Anyway, basically what happened, he was also a big real estate agent, also had an agency as well, but meaning a team. And basically what he had was an unorganized set of books. He tried marketing his business to one of his buddies, and his buddy was like, I can't buy this. There's no enterprise value. The books are not in order, et cetera, et cetera. He brought us in. We were advised to come in, clean up his books. He ended up selling his business for an absurd amount of money. And, we were talking to the guy, or the group really, who decided to buy the business. We said, well, what was the big difference? He's like, well, for one, now we know how to figure out what the company's going to do going forward, because now he has clean books, and it makes total sense to buy it because we know that it's on an upward transition. And he had no clue that was the case at the beginning of the day. So, hopefully this has been helpful. Tried to go through this very quickly, explain in a kind of easy to understand way, top 5 bookkeeping tips for real estate types. If you have any questions, et cetera, please reach out. vastassetdefense.com or vastsolutionsgroup.com. We do, we've been in business since 1969. I took over in 2006. Again, my name's Kenneth French. I took over in 2006 to help really business owners. And why business owners, especially real estate agents, et cetera? Because that's a group that's forgotten about. If you really think about it, there are so many groups that are forgotten about, but specifically real estate investors, real estate agents, because, well, they're kind of underneath the radar. Sometimes, let's say their net worth isn't, well, what some advisors would want to work with, especially sometimes real estate agents are all over the place, but that's our market. We work with real estate agents and investors all over the country. Been doing it. We've been doing it very well. Look at our website for some of our reviews. You've stayed with us this long. I appreciate that. Info at vastsolutionsgroup.com. Type in, let's say book. Entrepreneur's Manifesto, a collection of smart financial advice, a book that I wrote. I'm a Forbes.com contributor. I was a Forbes.com contributor for small business owners. And this is basically a compilation of all the, not all, but a number of the articles I've written, not only for Forbes.com, but also for other publications. I've compiled them. There are so many bad books out there, bad resources out there for small business owners, specifically for real estate investors. So what I did was I put this together, major retirement planning mistakes, a bunch of, can you put real estate in your IRA, et cetera, et cetera. Well, the reason I put this together is we kept getting questions when, from small business owners, mainly real estate agents, just simple things that can add value to real estate agents and investors. Put this together. I also decided to write a bunch of articles about things that would add value to real estate agents, et cetera. Forbes liked it, hence the reason I decided to put it together. Now, once again, I really do appreciate you taking the time to be here. It's been a pleasure. Hopefully, you've had some added value as a result of all this. Again, if you email book to info@vastsolutionsgroup.com, we'll go ahead and send you hard copy. By the way, we'll need your address as well. We'll send you a hard copy of this book, and I'm sure you're going to be happy that you received it because it's been valuable to a number of people out there. Have any questions? Again, info@vastsolutionsgroup.com. It's been a pleasure. Really appreciate you taking the time.